Hey guys, so I want to look at 5 stocks that you can turn 100 into $250. Now, why am I saying 100 to 250? I'm just pretty much looking at some of the things that I've personally done with these particular 5 stocks. And I know that a lot of people start with small accounts. Now, if you've seen the other videos that I've done in my shorts where I talk about stocks that you can turn 50 into 200, it's all the same concept. But the thing is, a lot of people think you have to start with an extreme amount of cash to start trading, and you do not have to start with a lot of money. So in those shorts, I talked about 50 to 200, meaning that you have to catch at least a $3 move in order to go from that $50 to getting around $150 in profit. Whereas you got to have a strike or a premium that has a decent delta that allows you to catch a 250 $3 move and you see $150 in profit. Now, same concept with the 100 to 250, okay? You still need to be able to make $150 in profit so that now when you sell this option, you just sold it for $250. So you're still catching a $253 move. Now, 250, of course, I just kind of look at that because your delta can change in value. And if you don't know how to, I guess I would say calculate that, you don't have to calculate it. Technically, the option chain will tell you. Your gamma lets you know how much in value your delta will change per dollar that the stock goes. So if the stock is going in your direction, you're in calls, this thing is going up, the gamma is increasing the delta. So if you, let's just say, start with a 45-cent delta and the gamma is 5 cents, the stock moves up $1, that means that your delta is going to increase to 50 cents. So the more this thing is going in your direction, the higher the delta is getting. All right. I hope that makes sense. So what I want to do is I want to take you guys to TradingView. Now, TradingView has a setup here, right? Where you can look at the option chain for various stocks. So no matter what platform you're looking at, the option chain will likely look about the same. It usually depends on how the data is set up because sometimes data can be a little bit delayed on some platforms, like Webull. If I'm not mistaken, it's what, a 15-minute delay on their chain, but for the most part, it'll be the same, okay? So the very first one we are going to look at is TSLL. TSLL is a direct, it's a direct replica of Tesla. Okay. Now, someone did mention and say, hey, I can turn 100 into 250 with Tesla, and you absolutely can. I went up a little bit. Now, I did a trade a while back. It was $195 that I paid for Tesla, and that thing ran all the way up to, I think I sold it at about 1,000, probably like $1,100 or so on that thing. Just over $900 in profit of it. But I held it for a bit and it made a massive run. Tesla has the ability to do that. But I didn't quite want to put that one on the list because you have got to be on the right side of the trade with Tesla, and you have to catch a nice size move to be able to turn 100 into a significant amount of money, okay? And one of those things with Tesla is I like to wait for it to get to very, very key levels, which is going to be very important for small accounts, so that I get in at a good spot, I let this thing ride out, I take my money and go. Oh, and let me put this out there too. I am basing this on a 7-day expiration date. Now, sometimes you may have to go an additional week out because you have to understand the stock that you are trading and how it moves. Is this a stock that make a $3 move on a day? Does this stock take 2, 3, 4 days to make a $3, $4 move, or a $2.50 to $3 move? You want to understand the stock that you're trading. You want to be sure that you understand whether or not a week is going to work for what you're doing. Now, this isn't some day trade type of thing, okay? Because when you're working with a small account, sometimes you have to hold your trades a little bit longer to see a little bit more profit because you started somewhere that may not have been in the money or at the money. So you have to give this thing time to move, okay? So the expiration dates we're going to be looking at for these 5 stocks are going to be based on a 7-day expiration. And I picked these because I know that within 7 days, they can make these moves. But remember, key levels. whether it's support and resistance, supply and demand. Even if you see a setup, you want to be sure that it's at a decent level that will allow you to catch a nice ride up or down to those targets. I am currently on TSLL and I am on a December 26th expiration. You see 8. Now we got tomorrow, so let's just say hypothetically we open this trade today. That gives us 8 days or 8 trading days to let this thing run. So you'll see the number 8 right there. Okay, so this right here expires tomorrow, and you will notice something about trades that expire in just say a short time period is that they're really cheap. Like you can literally get into a trade with this one around with $50. If you've seen the shorts that I've done about turning 50 into 200, hey, you can see that here. But we're not focusing on something that expires in one day. We need something that's going to give us time to let our trade ride. So we're working with $100, all right? Therefore, regardless of the direction that you're playing, if you got into calls or if you got into puts, if you were to get a $22.50 strike price, you would be looking to pay between 99 and 103. Now, let me give you guys a quick understanding of the bid and ask. If I were to open this trade at $22.50 right now and I did a market order, I would pay $103 for this trade. But I said, if the sellers, the lowest the sellers are willing to sell this particular option for is $99, maybe I should wait for this thing to get back there to a lower amount. You notice how this thing is changing because the value is moving, right? So now it's saying 105. Okay, so this is the thing. Well, 110, I'm sorry. So this here has moved. So you can set a limit order to say, hey, I don't want to pay what they're asking. I want to pay the bid price. I want to wait for the value of this option to come down some so that I can pay a little bit less and get in at a lower spot. So when this thing begins to go back up, my profits are a little bit more. Okay. So if you decide, hey, I'm going to just do a market order, go ahead and get my position open and go, that's cool. But me personally, I like to get this thing as low as possible. Okay, so I would likely go down some, whether it's 5 cents or I'll go to whatever the bid is and I'll get in there. So when the price comes back there, it executes my order and I ride the stock from there. Okay, so the X is usually what you will see on your platform that will say, hey, you may see bid, X, you may see price, you may see a mid price. It just all depends, but you can select how much you want to pay for that option. Now, will it get there immediately or how long it'll take? You just don't know, okay? You just want to be sure you understand how this thing is moving. So, in this case, this is letting us know that we can get into this trade for anywhere between $110 to $100 right now, okay? And you see a dollar, for those of you who may be new to this, you will multiply these numbers you see here by 100. One option contract equals 100 shares. Therefore, you will multiply times the price that you see here, and that'll let you know how much. Okay, that was just real quick for anybody who's new to option trading. So TSLL, we will get into a put for 7 days that it does not expire until 7 days. It will cost us around $100 to do. Now, of course, we need to look at our delta, and this is the most important part. Well, I won't say the most important part, but it's a very important part of working with a small account. Now, this delta is sitting at 44 cents. Now, remember, we're trying to make $150 profit off a $253 move. Well, it doesn't have to be that. It can be whatever the move is, but that's the minimum move that would need to be made if we are working with something like a 50-cent delta. In this case here, let's come over here. It's sitting at 44 cents, meaning that for every $1 that this stock goes in our favor, we will get $44 in profit. But check out the gamma. The gamma is 14 cents, letting us know that for every dollar that this stock moves, our delta will increase by 14 cents. This is where it gets good because not only is the delta increasing, the profits that we're seeing is also increasing because the higher the delta, the more profit. And as our trade is going in a direction that we want, we're getting more profit than we may have expected simply because our delta is increasing. Now, you've noticed how this here is also changing. The delta changes and the gamma changes as well. And this here has decreased by 1 cent. So if this thing moves a $4 in either direction, we will see a massive jump in that delta. So your delta will play a huge part in how much profit you will make. Okay, and your theta as well. The theta lets you know how much in value this option will lose per dollar that the stock moves. You will multiply all of this stuff by 100. This here says 13 cents, but it will actually be $13. This here says 7 cents, but it will actually be $7. Okay, so this value of this could be lost about $7 depending on how it's going. All right, so the same way you calculate the delta is the same way you will calculate everything else, but the most important thing here is that your delta is high enough to where you are seeing some decent profit to hit your target goal. Okay, and that is on puts. If you come over here to calls for TSLL, you'll see that with our $100 we can get a $23 strike. Okay, this right here is like a goal for those of you who are new to it. It's a target price that we have for the stock. So you got 96 cents, and this price is sitting at about 104, and the X is sitting at about $1, which will make it $100. So that right there shows you that you're able to get a $23 strike with your $100 at this very moment with a December 26th expiration. And then if you get into a put, you're able to get a $22.50 strike price with a 7-day expiration. Now, okay, the very next one that we are going to look at is INTC. Okay, that is Intel. Now, Intel has been on a up and up. Intel has given up some ownership to the U.S. government. They've been working with partnerships. It's been a lot going on, right, in this tech and AI space, and Intel is one of those ones that it can be traded with a small account. Okay, so in this case, we're on our December 26th. Let's look at the strike prices, okay? So if you were to go on calls, you got a $36 strike. And something I didn't mention, you guys see this little here? This is just letting us know what the stock cost is at this moment, okay? And this can move because once the value of the stock price changes, it can move certain things from in the money to at the money, out of the money. All right, so as of right now, Intel is about $36.39.40. Okay, so if we go into calls and we working with our $100, we would need to approximately get a $36.50 strike price. And that would give us around, we would be paying anywhere between $94 to $98 to get into this trade. Okay, now we come over here to puts. Let's see here. We can you actually have a little bit more option here. Now you guys see how cheap all of this is? This right here just lets you know you can work with a small account, but note the deltas. That's a 4-cent delta, 7 cent, 13 cent, 24, 39 cent. Now we come down here, and let's say you got just a little bit extra, and you can get a $1.13. You can pay around there. You got a 57-cent delta here. Okay, meaning you get $57 per dollar that the stock moves in value, right? But this here, 49 cents. And we see with our gamma is 0.18, meaning that this thing can increase significantly. And you will see a nice little cushion with a $2 to $3 move because this here is increasing pretty much. And that 59 cents there on that delta, of course, can get us to our $150 profit goal with just a $3 move. Key levels. I'm going to keep reminding key levels. Getting in at a good level to ride this thing up, okay? All right, now let's look at our third one. And our third one will be my favorite, which is MRK. Now, if you're in my school community, you'll know that I have made over 16K with MRK just in the last few months, right? When I first shared a trade plan for MRK, it was sitting at $80. It was sitting right in those mid 80s, and I rode that thing all the way to 105. And it has been offering some of the cleanest setups and rinse and repeat opportunities ever, just hitting through those same levels back to back, back to back. But I'm about to say it again. key levels. When you get in at a good level, let's just say $100, as you guys can see right now, I have the chart up over here. And key levels is just basically finding out where is support, where is resistance, where is supply, and where is demand. Let's say this thing rises back up to 105. We know that 105, we can see here how it has acted as a heavy rejection, right? So if 105 here, we hit here, then break, hit here, then break. 4 trading days, and then we begin to come back down. Now let's say we get back to 105 and it's doing the same thing. I say I'm going to enter a put here. I'm going to ride this thing back down to 102. That's approximately a $3 move there that I've just caught, right? Or it can decide to keep going. That's fine, but the main goal was to catch a $3 move. So if I have multiple contracts, maybe I sell one of my contracts here and leave the other as runners to kind of retest these lower levels. Okay, so this here has been giving us some of the same opportunities over and over and over again on MRK. This thing will break and it'll retest the lower level. You can make a move here. It broke and then it retests another level here. It breaks and it retests. It breaks, well, this is just a slight retest here, but it broke back through these little key levels and it's retesting these upper levels here. Just the same thing over and over and over again. And at this very moment, we're kind of working with a little double bottom here, which is a bullish signal. So if we break out above this little $100 level that it's been kind of, playing around, we can expect this thing to potentially push back up. Okay, so this is what I mean by key levels, making sure it's at a proper level to assure you that you can get the best move out of that move up or down. Okay, so in this case, we're working with $100 here. So with MRK, let's see, we're on the 16th. Let's go back to December 26th and let's see what we're working with. So we are able to get 101 strike price if we are to get into calls. And we're looking at between 100 to 107, between $98. Okay, so you can kind of see where we are right now on that price, on that bid, and on that ask. Okay, now if we decide to get into puts, we will need to come to approximately $100. And of course, we will probably need to let this thing come down a little bit if you don't have any extra change that you're working with, between 104 to 114. Okay, so if you got a little bit of extra change, cool. If not, then you can either set a limit order or of course you can just go to the next best option. But keep in mind our delta. In this case, on puts, the delta is 45 cents. Gamma is sitting at 0.12. Over here, the gamma is 43 and it's also sitting at 0.12. Okay, so even if you were to get in there and it's not a 50-cent delta, you still have the ability to see this thing increase as this trade goes in your favor. And the next one we're going to look at is SoFi. Now, SoFi has also been on a up and up. I have been on this thing since it was a couple of dollars. I'm talking about $6, $7, and been riding it up. It's one of those stocks that I have the most shares, and I have 500 shares of SoFi. And I do a lot of cover calls with it, but I don't go too hard because, when you're doing cover calls, if the individual who's using your shares decide they want to buy them, if it hits that strike price, I lose my shares. I get the value of those shares, but I lose them either way. And I bought them when they were so cheap. So if I get another 100 of them, I would be paying about $2,600 when I only paid $600 when I first bought the 100, right? So this is one of those ones that it's low risk, it's low cap, and you can definitely trade this when you have a small account. Okay, now let's look at this here. Currently, December 26th, if we were to get a $100 strike price on this thing, right? Let's see here. If we were to get into calls, we could go for a $26 strike price. Okay, we can go for a $26 strike price, and that will be a in the money option. Okay, so we are looking at between, it says 95, so 105, 102, we will be looking, depending on if you do a market order or a limit order, to get it where you want. That delta in this case is in at 60 cents. So for every dollar it moves, we get $60 in value increase on our option. Okay, so you catching a $3 move that puts you over your $150 target that you have for this one. All right, now let's come over here to over to puts, and you can actually come over here and you can get something a little bit higher. So we could look at this at about a $27 strike price, and come over here, we got 100, we got 103 and a 61-cent delta, just about the same on the other side. But even if you want to come up some and just say, well, yeah, I got 100, but I want to spend a little bit less, you can come up here and we got a 50-cent delta right here. Still, you catch a $3 move, you got your $150 or close to it. Okay, with this same one. These gammas are sitting at about 21 cents on both over here, and then over here they're sitting at 21 cents as well. Okay, so far $100, you can get in a decent spot. And even if you wanted to get multiple contracts, let's say 2 contracts, and you come over here and you get this. Now this delta is sitting at about 40 cents, but you get 2 contracts, right? The more contracts you have, the more profits that you will have as well. So you can get 2 contracts for $100 on SoFi at approximately $50 to $51, and you will be getting a, let's see, a $26 strike price. Okay, so if you decide that you want to get multiple contracts, you're able to do that, and you're still keeping it in your same $100 range, okay, with this. And so that's possible. And that way you can sell one at your first target, and you can leave the other one as a runner to hit whatever other target that you may have. Next one and last one that we are going to look at is RIVN. Now this is one of those ones where with one of my students, I wanted to really show her you don't need a lot of money to start option trading. I did this trade here, and we pretty much got into the exact same option. Well, got into the exact same trade, and then we turned $17 to $200 plus on RIVN, and we did not hold that option very long. What was the secret here? There was no secret. We just got in at a great spot, a heavy spot that we were confident that it could hold up, and we rolled this thing up. And I wanted to show her. Now, not all the time you can just put $5 in something and it turns to, $60, or you put $12 in something and it won't always be like that, but in some cases it can. It just all depends on the stock, the environment, what happens, and where you got in. But RIVN is always one of those ones that I use as a great example to say you don't need a lot. You don't need a lot. You just can't overdo it. You can't overstay, and you have to get in a good place. Okay, so if we're working with $100, let's go back to the 26. And if we're working with $100 to trade RIVN, then we are able to get in, let's see, if we are in calls, you can go anywhere between $18.50 to $19 on your strike. Now, of course, you see here is 109, 120. So you'll either need to let it to come down just a little bit, or like I said, if you're working with something a little bit extra, then this right here will say, okay, I can kind of go with something a little bit better. But in this case, $100, we can get in at around a $19 strike. We're looking at 81 to 87, current pricing at about 96 with a 59-cent delta. Okay, so there goes our delta that we need to be able to make our 150 on a $3 move. Okay, now keep in mind when I say stocks, to understand how the stock moves on a day-to-day basis so that you'll know how long you may need this. Now remember, this is just based on 7-day expiration, so you want to be sure that it's something that can potentially make that move. Okay, so let's go to puts. And on puts, right, we can actually get a $19.50 to a $20. So you're just basically looking at those prices. If you have the extra, if not, then you will be looking at around $87 to $92 to make a move on this particular strike. And this one has a 50-cent delta, and it just moved to 52 cents. So that right there will be your delta, or that would be your strike that you would need to ensure approximately $150 on your $2.50 to $3 move. Okay, now before I close this video out, something that I really want to want you guys to keep in mind, for those of you who may be new to option trading, is that the further you go out on your expiration, the more expensive it will get. So to use RVN, for example, if you had $100 and you got a $19 strike, you will be looking at 85 to 89, right? All right, boom. Let's go to February, hypothetically. Let's go to February 20th, 2026. That's in 64 days. If we got that same strike, it's still not very expensive, by the way, if you notice that, because that same exact one at that $19 strike, you would be looking at approximately $248 to $254, and this delta is working with about a 58 cent. It's not very expensive to trade RIVN in general. You can get something that expires way in February and you're only paying about $200, maybe $300, depending on what side you're going to be playing and which strike you pick. But that same $19 strike that we would be paying approximately $100 for, or $80 for rather, you'll pay about $200. Okay, so you'll notice that the further you go out, the more expensive this thing could get. Now, we go from the 26th to we go to January 2nd, the price is going to increase, yeah, but not a whole lot, because guess what? You can still take your $100 and still get in at a decent spot. 50-cent delta, 95 to 91, right here at a 19.5, which is $19.50 strike price. Okay, and the same thing over here is about a $19. So go and pick the expiration that still fits within your budget and it's still in a good spot to where you're not having to go so far out of the money. That way you're not waiting forever for this thing to make a move. But just remember, know the stock you're trading, know how it moves on a day-to-day basis so that you can take that into consideration when you are selecting your expiration date, so you know that you have enough time to let this trade do its thing. Okay, so those were some stocks that I want you guys to keep on your radar if you are new to it or you're working with a small account. And just remember, this is not a day trade thing, or it could be. Sometimes a stock can, especially TSLL, you can potentially see that $150 on that day. And once you hit it, close your trade so that you just secured your $150 on that particular stock. All right, so all of these can be done with a small account. You can also start these with $50. You just may have to go a little bit down some and just kind of let it play out. All right, so I hope this helped. I hope these are 5 that you can keep on your radar. And if you're working with a small account, that you're able to have somewhere that you can come to start small, grow your account, and then either go bigger or stick to what has been working. All right, just keep in mind to not jump into your trades prematurely and to always allow key levels to hit before you make your move. And with that, I will see you guys in the next one.